Condominiums are more difficult, I should say, than a house to finance. Why is that? Hi, Sagafi, Liberty Home Mortgage. This topic today, why are condos hard to finance? I typically tell people there are two things that we qualify. We qualify the borrower and we qualify the property. How do we qualify the borrower? Simple, we pull your credit, collect your docs, run you through a system, do all this fancy schmancy stuff, whatever. How do we qualify the property? We get it appraised. Condominiums have an extra layer of qualifications. There's something called the Condominium Questionnaire. So there's a set of questions that the association has to get filled out. And those questions can make or break the whole transaction. The Condominium Questionnaire is a set of questions. It's like 30 to 50 questions or so. There's some different things we need that we ask them. I'll give you a quick example of it. For example, we're going to ask how many of the units are rented out. Think about this. If you have a condominium and it's a building of 100 units and they say, Hesh, 90 of the units are rented, you wanna know something? You don't have a condominium, you have an apartment building, for God's sakes, okay? Different types of loans have different requirements in regards to what percentage of the units could be rented. What's another example? If you have a condominium where most of the owners are delinquent on their association fees, one of the questions we ask the association is, how many people are currently past due on their monthly fee? I'll tell you what, show me a condominium, I'll give you an example of this. Show me a condominium where most of the unit owners are delinquent on their association fee and then the roof needs to be replaced. Guess what? The association doesn't have the money to make the repairs. This is the goofy stuff that can happen. So one of the questions we ask are how many of the owners are delinquent on their association fees. I'll give you a couple more that are pretty easy. For example, let's see the insurance coverage on the condominium. Does the association have the proper amount of insurance coverage? And also, do they have the proper amount of insurance coverage for what the particular loan guideline requires? There's something called reserves, for example, just as an example. There's something called reserves. We want to look at the budget of the association to make sure that they're financially, they have money in the bank to cover expenses and repairs and things like that. So of course, we're going to say, show us your budget. They don't have reserves. They're in the negative or something like that. That's massively bad, very bad financially. If you're buying a condominium, just think about this one. You qualify as a buyer. I always tell people this buying condominiums, hey, you're good, you're solid. It's the property and the association that we're qualifying. Now think about this one. The condominium gets appraised. It appraises for value. You're buying the condominium for $200,000, it appraises at $200,000. That's good, the value is good. But then most of the unit owners are delinquent on their association fee. Most of the insurance coverage is not enough that's required for the loan. There's no reserves. There's a lot of different aspects of associations of how the condominium is managed. A lot of these declarations and bylaws that were written up 40, 50 years ago. No changes have been made. They haven't been fluid with the market. The next thing you know, something that was written 50 years ago and is fine is not fine in today's market. So condominiums have an additional layer of, let's call it guidelines, that a lender is going to require them to go through, that when you're buying or selling a condominium, understand, I hate to tell you this, it's an extra layer of guidelines. Instead of two things, it's three, okay? Naturally, the more things we have to look at, the more potential problems arise. It doesn't mean condominiums are bad investments. I think condominiums are awesome, okay? I used to live in a trailer, for God's sakes, in Oklahoma, and I will tell you, it was pretty awesome. But then, of course, I was in college. A couple times, I think I woke up in the grass, actually. It didn't really matter. But when you're that age, you're not really thinking about too much else, okay? So condominiums, understand, they have an extra layer. The borrower, it's the property, it's the association with the questionnaire. It's those three things. That is why condominiums are a little tougher to finance than a regular detached home. Keep buying them, they're great investments. It's great for everybody, it fits your lifestyle, it's awesome. You don't have to cut the grass, plow the snow, do any of that stuff there. Keep following these videos. Make sure you subscribe, like, and share. See that? When I say it too fast, I stumble over my words. But anyways, we'll catch you on the next video.